again, and we'll just kick off. As we know, we started the day off today with the economic calendar, and just refresh the economic calendar page. Let's bring it all up to date. So today, the 4th of May, Wednesday, the 4th of May, was looking for reports of high importance that could affect the market that we're trading. And when we come down, we see that there was a report at 10 UK time, the Eurozone retail sales, that's a report of high importance. Then that's already been announced. And then the last one of importance is the one at 3 o'clock, which it comes out in about 8 minutes time. That's the US non-manufacturing composites report. That's a report of high importance. Now, we know the market tends to trend sideways prior to a report of high importance. Again, I never tire of repeating it. You don't use the words never or always in the market. You know, the market will do what the market is going to do. You don't use the words never or always. Well, you can use the words probably, tends to, usually, you can, but you don't say always or never, because you can't put the market in a box. It will do what it likes. So the market tends to trend sideways prior to a report of high importance, prior to the last report of high importance. But according to my own trading plan, I tend to place one trade before the report of high importance comes out. And if I lose out on that trade, I will stop trading and wait till the report is announced before I trade again. So with that in mind, when we met this morning, we saw the market trending sideways between the pivot point and the first support. So we placed a pending sell order just below the first support at 14,760. And we placed a pending buy order just above the pivot point at 14,828. So the plan is that if the market goes up, we'll buy. If it breaks the pivot point, if it goes down, we'll sell if it breaks the first support. And that's what it did. At 7:30, it took our buy order when it broke the pivot point. We kicked in a 20-point stop loss. So we deleted our pending sell order so we could just concentrate on that live trade. And we had a stop loss of 20 points and a profit limit of 60 points. So at this point in time, we're happy to lose 20 points. And if we lose the 20 points, the market comes straight back down and takes us out. We're happy to lose the 20 points. And if we lose that 20 points, we just stop trading till 3 o'clock. That was the plan. But in the meantime, while the trade is on, our first target is if the market moves halfway towards our profit target. So if it moves 30 points to 14,858, that's our first target. Because once it gets halfway, at that point, then we will stop risking 20 points. So until the market moves halfway, we're happy to risk the 20 points. And we can see the market got halfway towards the target, crossed the halfway mark. That's about 835. So at that point, you then move your stop loss to the opening level and protect your capital. So at that point, you don't want to risk any money. But at the same time, too, you just leave your profit limit in place. So at that point, the market will either come down, take you out, and well, you don't lose any money, or it keeps going up and you hit your profit target. So you can see the market came down, came quite close, but didn't take our stop. It could have, but that's the plan. We're just sticking to our plan. So if it took us out and went back up, that's fine, but that's our plan. So it came down, went up, came down again, went sideways. It was just messing around. It's been going sideways, and then at 105, the the market took our 60-point stop, and we made a 60-point profit, and that's we done for the day. So we achieved our 60-point profit target at 1:05. And as part of our plan too, once our profit target is achieved, we stop trading for the day. So because we've achieved our profit target, we're now in a good position where we don't need to worry about the report coming out in a couple of minutes, but we'll see what happens. So with that, we'll just update our spreadsheet. Let me just bring the spreadsheet up. So again, I'm just highlighting the importance of sticking to your trading plan, because not every day is the same, and the market can do silly things, but it's your trading plan that keeps you sane, that keeps you going, that keeps you having some sort of discipline and plan to your. And again, I was talking yesterday about fear, because sometimes, with fear, you don't want to take your trades. You're hesitant in taking your trade. You think, well, because I lost money on that trade yesterday, I'm not going to take that trade. Again, I always say with trading, you try hard not to make emotional decisions. You judge your trading plan on what tends to happen more often than not, and always remembering that you're not going to get it right all the time. So the fact that you lose out on, you plan your trade well and you make a loss doesn't mean the trade is bad. That can happen anytime. So that's the mistake sometimes we make, is that we think because we've lost money, it's the trading plan that is bad. But it's not the trading plan. Whatever plan you have, you're going to have losing trades, whether you like it or not. So it's always remembering that. So you stick to your plan. And so we made our profit for today. So we're now back up to £140. And we're going to stop trading. But again, it was a good trading day because I stuck to the trading plan. And also you can put here market trended prior to report of high importance. Importance. So again, you make a comment there. So again, you can see here that yesterday we lost £30, but it was still a good trading day. So again, I kind of emphasize that. The key is, do you stick to your trading plan? Don't worry whether you're making money or losing money. The question is, are you sticking to your trading plan? Because the day you stick to your trading plan to the letter, that's a good trading day. It's not whether you made money or lost money. So again, I'm very happy that happened yesterday because again, I think this is what people always tend to forget with trading. They think every day is going to be a successful day. You're going to make money every day. The market is going to trend every day, and you just click the button, make money, click the button, make money. No, that does not happen. You will have losing trades. I always tell people that, if you can't accept that truth, you're going to find trading very frustrating. You are going to have losing trades, whether you like it or not. But like I said, if you get to the point whereby you can accept that, no matter what you do, you're only going to get a 40 to 50% success rate. So your aim is to, get a trading system or a trading plan that will give you at least a 40 to 50% success rate. Well, what that means when you say 40 to 50% success rate, it means that, 4 out of 4 out of 10 trades will be successful, but it also means 6 out of 10 will be unsuccessful. And it also means that, you know, every time you place a trade, you have a 40% chance of making money, but you also have a 60% chance of losing money. Again, that's why you don't overtrade. So again, people always focus on the profit side of things. They don't think about the losing money side of things. And unfortunately, the losing money side of things tends to happen more often than making money. So failure to appreciate that fact is always a major problem with trading, because once you don't appreciate that fact, you keep thinking, you know, you need to have a 70% chance of making money, and then when you lose money, you think, oh, it's the plan. You change your plan. You keep changing your plan because you're looking for one that would give you a 100% success rate. Sometimes you don't admit it to yourself, but sometimes subconsciously you find yourself changing your plan all the time, because subconsciously you're looking for what will give you a 100% success rate, which is natural because unfortunately we're human and no one likes to lose. And when you lose money, you know, that's why we always say the psychology of trading is the most important part of trading. You know, we talk about greed and fear. You know, all these emotional reactions you get in the market, and being able to control your emotions are difficult, because it's only natural to be upset when you lose money on a trade. But I think if you can, you know, keep reminding yourself that, you know, this is a fact of trading and it happens, it helps you deal with the losses better. It's when you ignore that fact and think that, you know, it's not normal to lose money in trading, and you're looking for a perfect system, that's where you find losing money frustrating. But once you can come to that realization and accept the fact, then it's easy to deal with. So when you make a loss, you say, well, that's fine, tough, it happens. Yeah, I don't like it, I don't like the fact it's happened, but hey, this is trading, it happens, then move on to the next trade. And what you just keep trying to focus on is your strategy and your plan, and just asking yourself, have I stuck to the plan? You know, am I trading according to my plan? Am I making decisions according to my plan? And if you keep answering yes, yes, yes to that question, and that's fine. And like we showed on the spreadsheet, if you can end every trading day saying you stuck to your trading plan, then that's a good day. Okay, let's just assume you hadn't placed a trade. Well, like I said, we are not trading anymore. We've achieved our profit target. We're going to stop. But just for academic purposes, let's just assume we hadn't placed a trade, or we had lost out on that trade. Then to place a trade now, obviously we can't sell just below the first resistance, because the moving average is below the first resistance at this point in time. So we can't sell there. Unfortunately, we can't buy because we don't use R2 to buy, so we can't place a pending buy order. A pending sell order we can either place either just below the moving average 50 at 14,885. But remember, this is a moving average, so it changes every 5 minutes, because we are using the 2 days 5 minutes chart, so it changes every 5 minutes. So you have to keep editing your order and moving it along with the moving average, you know, keeping it 2 points below. Or you could just place your sell order just below the pivot point, because let's move that. So we can move that to, what's the pivot point level, is 14,824. So those would be our options, to either sell just below the moving average 50, or to sell just below the pivot point, because those are the only 2 points we can sell below the moving average. Remember, you sell below the moving average 50, you buy above the moving average 50. So currently above the moving average 50, the only opportunity we have is the R2, but we don't use the R2 to buy. So there are no decent buy opportunities. but we can sell just below the moving average 50 or below the pivot point. But we've already achieved our profit target, so we don't need to do anything. Any questions? Well, let's have a look at Dow Jones. Dow Jones seems to be collapsing with the release of the report. So you can see the effect of the report on the market. So you can see the report came out and Dow Jones is falling. Okay, any questions before we go through the options? We're going to place a virtual trade on the options just to show you how you can place a trade and see what happens. Yeah, Dow Jones falling like that is not good for my call options. So the call options I have will be taking a battering with the market falling like that. But anyway, we have our stops in place for the options. So if you have any questions, do click the hand button or send your question through the question box. You want to have a look at pound dollar? Yes, we can have a quick look at pound dollar. So you can see pound dollar is always not as smooth as euro US dollar. So you can see the pound dollar fell yesterday, sideways, and went up, and came down, sideways, you know, spiked the pivot point there, fell back down. You probably would have lost 20 points there. So even if you had bought there, you would have lost 20 points. But at this point in time, to trade the pound dollar, again, just like the euro US dollar, at least now you can buy just above the first resistance, because we can use that to trade. So you can buy at 16,617. And then to sell, again, you can't sell just below the pivot point because it's above the moving average 50. So again, you can only sell just either below the pivot point or below the first support. So those would be your options for pound dollar. So again, it's just looking at the market and deciding and looking for clear opportunities. Again, the key is not to force trades. You know, depending on your strategy, you look at the market and decide what strategy is good. And looking here, you can see the only clear one is to buy just above the first resistance, to sell just below the moving average 50. We can use the moving average 50 now because there are no more reports of high importance coming out, or just below the first support. So that's pound dollar. Any other questions before we place our options trade? No, okay, good. So let's go and place our options trade. Like I said, this is just a virtual trade because as we saw this morning, there are no clear opportunities with the options. Let's have a look at the positions. Yeah, you can see that you know, they're all reducing the value because the market is falling. So all the positions are taking a bit of a beating, but we'll see what happens. It might still recover, but we've got stops in place, so we leave that. So let's go to the charts. I'm just going to pick one stock, and we'll just place a call option as for illustration purposes only, I stress, because none of them have fully fulfilled the criteria yet. But I'm just going to demonstrate to you how you can place an option. So let's assume today is at the end of the day, so it's midnight, sorry, not midnight, it's after 9 p.m. at night. You've had your supper, you've spent time with your loved ones, you've played with them, you've had a relaxing time, then about 10, 11 o'clock, while you're brushing your teeth, just about to go to bed, you just quickly go through your options, watch list, and then you look at, let me put OPEN, we'll use this as an example, we use open. So you go through your watch list, and as you're going through your watch list, we'll just wait for this to come up. There we go. Oof, that's gap down. That's not good. No, that's not a good example. That's gap down. Let's try BIDU. Although, even if this one too is gap down, it don't matter. We'll just use it for. So okay, let's just assume. Let's stick with this one. So let's just assume, this is 10 o'clock at night. Just before you go to bed, while you're brushing your teeth, you're just quickly going through your watch list, and you find that this is a stock you've been watching. That it's been uptrending. It then became oversold, and then as you saw it today at 10 at night, where the market is closed, you saw that it's closed above the moving average 7. So it's okay, well, this has now fulfilled my criteria to place a call. It's been uptrending, it became oversold, and at the close of trading today, it's closed above the moving average 7. So you then say to yourself, tomorrow, when the market opens, if the stock price keeps going up in value, I'll place a call option. Obviously, you can see it's dropping in value, and if you want, you can go to the 2 days, 5 minutes chart. This is the 1 day, 1 year daily. So you can go to the 2 days, 5 minutes. So we've now moved over from last night to 3 p.m. Around the market opens at 2:30, so it's now 3 p.m. So you're now looking to see if you could place a call on this stock that you looked at last night to see if it's fulfilled the criteria. But what you want to make sure is that after about half an hour to an hour, it's still going up in value. Obviously, if it's dropping in value, you don't place the call. You only place the call if it's still going up in value. So that's the final check you make when the market is open. So let's just assume now it's still going up in value. You then say to yourself, okay, I'm going to place a call on this stock, BIDU. Okay, so once you're that, you satisfied yourself with that, you then go to quotes, go to options chain. So we're going to bring BIDU up, BIDU. So that's the options for BIDU. We're going to select all strike prices. We've got all of them. So we can choose strike price May, June, September, December, January. So like I say, usually when I trade options, I want to have a minimum at least 2 months out. We're already in May, so I'm looking, I want the whole of May, June, so I'm looking for options that will expire sometime from July. So I don't want June, that's too soon, so I'll be going from, so the other one after July, after June here is September. So I'll go for the September call. I usually just go for strike prices close to the current value of the stock. So the current value is 138. So I'll go for 140. So just out of the money. So we'll go with 140. So strike price 140. So we're going for September 140 call. We want the open interest. That's open interest. You want the open interest to be at least more than 100. So that's 1,443. So that's good. And you can see the price. So one contract, remember one contract is 100 shares. So one contract will be 13.45 times 100. So that's $1,345 for one contract, and I want a minimum of 5. So the price there is 13.45, between 13.45 to 13.7. So we've chosen the September 140 call. Now, if you're using real money, you just click trade, which is what I would have done if this was fulfilled the criteria. You just click trade and the ticket comes up. But since we're just illustrating this, we'll go to virtual trade. Click launch virtual trade. And again, like I said, for beginners, make sure you practice with your virtual trade. So we'll go to trade, we'll go to options, and we'll type in the symbol there, which is BIDU, BIDU. Again, this session is recorded, so don't worry. So you've got two options here. Since we've already chosen our option of September 140 call, we can pick that straight away from the drop-down menu. But if you want to, you can also go to Find Chain. If you haven't picked it already, you can go to Find Chain and do the same thing we did there. And we can pick the September option. And you see 140, so you can just click on the bid or ask price, and then that brings up the call option there. So once you selected it, you select the options here. You can either buy to open, buy to close, sell to open, sell to close, but you want the buy to open option. You want to buy to open up this position. Like I said, you want a minimum of 5 contracts to make good money. Like I say, when I'm using real money, I use the limit, and I usually, you can see here, the last price was 13.45, and it's currently trading between 13.25 and 13.45. So usually I tend to put a figure in between that. I could just put 13.3, so that I'll know exactly how much I'm getting from my option. So I know exactly I'll be paying 1,330. If you put market, the market will just take you in whatever the market gives you. So let's see what happens. You can see the bid here is 1.325 by 13.25 by 13.45. So let's go with market, because market will just take you into the trade straight away. We'll leave it as a day order. We'll click preview. So you can see we want to buy to open 5 contracts of the September 140 call. Like I say, one contract size is 100. So we're buying 5 contracts. Commission of $14.95. So total cost of this order will be $6,739. So we'll click place order, and that should take us straight into the market. So you can see our order was filled. You can see what they filled our order at 13.65. You remember it was 13.25 by 13.45, so you actually filled that order at 13.65. So usually when you go with a market option, you always get a terrible price, but that's fine. We're just doing this for illustration purposes. So we go to view position. So you can see that's the live trade now. It's taking us straight into the market. So that's the BIDU September 140 call. So now that you've placed your trade, you now have to place your stop loss and your profit limit. Usually for options, I go with a 50% stop loss and 100% profit. So once I'm losing 50% of my initial investment, I come out. Once I make 100% profit, I come out. So you can see the price we bought it was 13.65. Let's just round that up to 14, just to make it simple. So we bought it at 13.65. Remember, we bought it for about $6,000. We bought it for about $6,000. So if we bought it for about 14, actually it's 13.65, but I'll just round up to 14. So 100% profit would just be 14 times 2, which is 28. And the 50% loss would just be 7, 14 divided by 2. So basically, 100% profit, we want to make about $12,000 and 50% loss, we only want to lose about $3,000, just half of what we invested. So that's how you just calculate your 100% profit and your 50% stop loss. It's just you take the option price, multiply by 2 to get your 100% profit, divide by 2 to get your 50% loss. So to bring up, to set your stop and limit, you click on trade. You can only do it once the trade is live, so you click on trade. So you now choose the sell to close option. Again, 5 contracts. So we'll start with the profit limit. So limit, we'll say 28. So now you select the good until cancelled option, which means that this order will be there until the market takes it or until you cancel it. So you select good until cancelled. Then the advanced order, you also select one cancels another. So you can select one cancels another, meaning if the market takes your profit limit, it will delete your stop loss. If it takes your stop loss, it will delete your profit limit. So once you've selected one cancels another, you click preview order, and that will bring your ticket back for you to set the stop limit. So you see it brings the ticket back. Again, we'll select sell to close. Now we'll do our stop now of 7. Again, good until cancelled, but you can see one cancel another has been grayed out because we've already set it, and then you click preview order. So there you go. So you can see sell to close, 5 contracts, 28. So you see if it takes our limit of 28, we're going to end up with $13,900. So you can see that's a straightforward 100% profit from the $6,000 we invested. If it takes our stop of 7, we'll come out with $3,400. So you can see we've lost $300 from the $6,000 we invested. So that's a 50% loss. So click place order, check order status. So you can see that's our order there, the stop. So you've got a limit 28 and a stop 7. So there you go, your trade is on autopilot. So if the market goes up and takes your limit, you make your 100%. If it goes down, takes your stop, you lose 50%. Any questions on that? Like I said, this session is recorded, so you can get to watch it again. Any questions? Like I said, there's no session at 8:30 because we finished trading for the day. So make sure you update your spreadsheet with today's trading, and we'll start again tomorrow. Okay.